Welcome to today's tutorial on taxfriendonline.com. Today we're going to go over the topic, deducting taxes you paid on the form Schedule A. So this is the form Schedule A where you can itemize your deductions. And this section right here is where you can deduct the taxes you paid. Now as you can see in box 5, you can either deduct the state and local income taxes or state and local general sales taxes. You can also deduct real estate taxes, personal property taxes, and 8 other taxes in which I'm going to go through in this tutorial. Now, as we mentioned before, you can either deduct state and local income taxes or state and local sales tax. So first I'm going to go over state and local income taxes. Now, state and local income taxes include taxes withheld from your salary, estimated payments, and balances due from an earlier year. In your state and local income taxes, do not include penalties or interest you paid, and do not reduce your deductions by any refunds or credits you are eligible for. So now naturally the next question is going to be, where can I find the state income taxes that I paid? And the answer is you get that on the W-2 or the 1099 for those independently employed people. So on the W-2, box 17 here on the bottom, it says state income tax. Now the dollar amount listed in that box is the amount that you can deduct on the Schedule A. And also on the 1099, there's a similar box. Now it's not the same number, but it's going to be labeled state income tax, where you can get the dollar amount off of that form. So now I'm going to talk about deducting state and local general sales tax. So there's 2 ways that you can deduct state and local general sales tax. The first is to deduct the actual taxes that you paid. Now this requires keeping all your receipts and keeping meticulous records. So if the sales tax on the food, clothing, medical supplies, and motor vehicle that you purchased during the year is less than the general sales tax rate, then you can go with the general sales tax rate. On the flip side, this only applies to motor vehicles. If the sales tax on the motor vehicle that you purchased was more than the general sales tax rate, you must go with the general sales tax rate. And then the second option is to use the optional sales tax table. And if you purchased a motor vehicle, a boat, an aircraft, or home, basically large item purchases, you can add the sales tax paid. And in the next slide, I'm going to show you exactly how you use the optional sales tax table. So now I'm going to talk about how to use the optional sales tax table. To use the table, you want to go to the irs.gov website here. And in the top right search bar, just type in sales deduction calculator and hit search. Now there's 2 ways that you can use the optional sales tax table. First is to do it manually, which is tedious and takes a lot of time, or you could use the sales tax deduction calculator. And the search resulted in a link that says sales tax deduction calculator right here, the second result. So click on that link there, and then it'll take you to the page. And then on the bottom it says ready to start, continue to the sales tax deduction calculator. So you want to click that link, and then comes a form that just kind of explains things. You want to hit continue, and here we are, we're at the calculator. So it says select tax tier, and we want to select 2011. And then it says select your income range for the year. So we want to select, let's say 40,000, at least 40,000, but less than 50,000. And then you want to select the number of exemptions. So let's say 2 exemptions. And in this third box here, it says if you paid sales taxes in 2011 on specified items, enter the amount. And the specified items, which I previously went over, includes motor vehicles, boats, aircrafts, and homes. So let's say we bought a home last year, and the interest on the home was, I don't know, $6,000. And then we say continue. And now we're going to enter the zip code where we lived in. So I'm going to enter the zip code 98115, which is a Seattle, Washington zip code. And then we hit continue. So right here it says Seattle, King County, Washington. Continue. And then it says, did you move to a new residence in 2011? And it's basically asking, have you lived in a different locale, because different locations have different sales taxes. So if you click yes, then it's going to ask you all the different residences that you lived in, and if you say no, then it'll just take you to the next screen. Okay, so this is the overview of all the information that I inputted, and then I'm going to hit continue. And there you are, a handy dandy printout. And here it says total general sales tax deduction rounded to the nearest dollar, and $6,988 is the dollar amount that you can deduct for local sales tax. Okay, so now we're going to go back to the Schedule A form, and then in the section taxes you paid. So we determined that we can either deduct the state and local income tax or the general sales tax. So obviously you want to go with the deduction that gives you a larger dollar amount. So in this case, let's say the income tax was a larger dollar amount. And then it says real estate taxes, parentheses, see instructions. So the real estate taxes that you paid goes in box 6. Now, if you go to the IRS website and you type in form Schedule A instructions, there'll be a little PDF form that looks like this. And in this section right here, it says line 6 in the instruction form. This corresponds to the Schedule A line 6 item, real estate taxes. So in this section here, it has all the nitty-gritty details of what qualifies, and it's going to be too long of a tutorial to go over everything, but you can read it for yourself to see if it applies for you. And then finally, you enter your personal property taxes in box 7, and then any other taxes, such as any income taxes that you paid in a foreign country, goes in box 8. Then you total all the taxes you paid in box 9. And then once you total all the itemized items from the different sections, you put your total itemized amount here in box 29. And then that dollar amount transfers over to the Form 1040. And Form 1040, second page, item number 40, says itemized deductions from Schedule A. So that total dollar amount goes on line 40 on the 1040.